Good morning, ladies and gentlemen, and welcome to the Rainbow Rare Earths Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it is appropriate to do so. And before we begin, as usual, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to CEO George Bennett. George, good morning, sir.
Good morning, and thanks for having me. Once again, this is a presentation on year-end results and progress of Rainbow over the last year. And hopefully some of the attendees might have already seen the announcements we've made over the last year, but I'll cover a lot of those, and hopefully you'll get a better understanding of where we are at Rainbow at the moment. There's the usual disclaimer, and I'll now move on to the presentation. Thank you. So I'm pleased to say that after the last year, we've been able to achieve the first commercial recovery of rare earth elements from phosphogypsum. Guys have been trying to do this for many, many years. Historically, everyone knew there was phosphogypsum contained rare earth elements, but when we secured the Phalaborwa project and started working on it in January 2021, we realized that we had something special here. And as you can see from the slide up there, that the key thing about this type of phosphogypsum that we are chasing around the world is that it's a source of phosphate from a hard rock carbonatite, which is mined and turned into a phosphate slurry through a concentration process, and this is fed into a phosphoric acid plant. The phosphoric acid plant is used to produce phosphoric acid for the fertilizer industry globally, and in this type of phosphoric acid production process, it uses sulfuric acid as a large additive as well as heat to generate phosphoric acid, and that's a key element in the Rainbow project. As I said, the phosphoric acid produces a waste product called phosphogypsum, and the rare earths are concentrated in the phosphogypsum that is deposited onto a stack. In Phalaborwa's case, it's onto 2 stacks, and the gypsum waste residue, the rare earths deport into the gypsum waste residue into economic quantities of rare earths in the phosphogypsum. Rainbow's been able to develop a unique flow sheet with in-house IP to recover the rare earths from this phosphogypsum. I just want to stress here that all the technology we're using is proven in other industries. So it's tried and tested and proven. In other words, we're using big belt filters, which are commonly used in mineral processing industries. We're using leach tanks. We're using filtration. We're using rapid consolidation of the rare earths into a pregnant leach solution, and then we're going to continuous ion exchange. Continuous ion exchange is used throughout the world and in various industries, but very, very well known in the uranium industry, where it's used when you design and build uranium plants. And I want to stress that the Rainbow team have designed and built 2 uranium plants, and they're on production. So we've got all that experience within the team. And then we're using continuous ion chromatography, which is once again, it's a technology that was patented some 30 odd years ago. It's used in the sugar industry, lysine industry, as well as the biochem industry and phosphate industry. And it's used to extract uranium and thorium out of phosphogypsum in Morocco at the moment by OCP. And once again, it's a proven technology. We're just using it in a slightly different arrangement or in a flow sheet, and we're targeting rare earths which are very similar to uranium and thorium that we all know are part of they're not classical rare earths. The 17 elements make up a rare earth suite, but uranium and thorium are also associated with rare earths. And the fact that this technology is successfully applied to remove uranium and thorium gave us the confidence that it's the right technology to use going forward to extract rare earths out of this phosphogypsum. So as I stress, it's an innovative flow sheet, but using proven processes, and we're using these proven processes to recover rare earths, which are critical to the green technology and the green transition, I should say. And there's enough about that on the various, you can Google it, but we all know that it's key to what everyone's trying to achieve in terms of net zero by 2050. So some of the achievements over the last 12 months, which I think we're very proud about, our pilot plant, as we've been able to produce 2 saleable products to date. So initially, I wanted to de-risk Rainbow for investors, and the first key risking step was that we successfully produced a mixed earth carbonate. And if Rainbow had stopped at that stage, we would have had a successful product which we could sell. A lot of rare earth projects start and only produce a mixed rare earth concentrate. Then they crack those rare earths into a chemical form, and they stop at producing a mixed rare earth carbonate. Now, Rainbow successfully did that, and the carbonate has got a payability of around about 70%. We didn't want to stop there. We wanted to go all the way through to separated rare earth oxides. As I mentioned, we're using technology which is proven, but it's just for the first time we're applying it to the rare earth suite in processing. And we've successfully de-risked Rainbow further, but we've been able to achieve a separated rare earth oxide at circa 96 to 97% purity, using this back-end technology we've described, continuous ion exchange and continuous ion chromatography. And that in itself is another de-risking step for Rainbow, because we've established through two completely different parties that we could sell this purity level of separated rare earth oxides, but we would suffer an impurity discount, similar to other minerals in the mineral space. That if you produce a copper concentrate, depending on how pure your concentrate is, you will then get discounted from the index of copper metal, which is 100% copper, and your copper concentrate would be discounted for the amount of impurities in your copper concentrate. So it's most similar to what you see in other minerals around the world. But our target is 99% plus purity, and we are on our way to achieving that. We've also, during the last year, secured strategic equity funding for the project at the project co level from the US government, the DFC, of $50 million. This is via the Green Critical Minerals Fund of TechMet, and this $50 million has been committed by the DFC via TechMet into Rainbow's Phalaborwa project here in South Africa. So we think that's a very, very significant de-risking step. We had independent third-party validation of our project, of our technology, of the flow sheet, and so forth. So that was very, very good to receive that $50 million equity investment commitment by the DFC. We also did a $5.5 million private placing, strongly supported by the board and management during the course of the year. And then in July 24, we did a $10 million raise via an 8.5% royalty agreement and share placement with the Cora, largely undilutive to Rainbow shareholders. And we've all been about trying to protect shareholder dilution in Rainbow as we move forward. Once again, the Cora did extensive DD on Rainbow, not only legal but technical DD on our flow sheet. And once again, we've had third-party validation signed off twice within the last year on Rainbow's processes that we'll be using to extract the rares from the phosphogypsum. So once again, I believe a very big and confident tick in Rainbow. We also had an update of the resource. It increased by 15% to circa 35 million tons, which will give us an extra 2 years of project life. We've gone from 14 years to 16 years, and 16 years for the guys in the industry will know that's a very, very good project life for this type of project. And as we've mentioned, the in-situ value of the rares at spot prices at the time is $7.3 billion. And we all know that rare earth prices are forecast to continue rising steadily, hopefully, but strongly over the next decade. In terms of trying to create independent supply chain outside of the US, we've entered into an MOU with LCM. LCM are a business that's been around for over 30 years, and they take separated rare earth oxides, turn into metal, and then alloy, which they then sell to permanent magnet manufacturers. LCM are doing expansions at the moment in the US, and they're looking for a source of separated oxides, and they believe Rainbow will be one of the projects that will go into construction and into production. Hence is why they signed the MOU with Rainbow. They targeted Rainbow some 3 years ago. So this was accumulation of a couple of years of discussion. And when they saw our success in the pilot plant, they were happy then to sign an MOU with Rainbow. And we've also deepened into offtake discussions with various supply chain participants, OEMs on the car manufacturing side, on the wind turbine side. And on the wind turbine side, they seriously are worried about dysprosium and terbium supply, and we will be a commercial producer of both of those two key rare earth products. In terms of circularity, as I said, we've also entered into an offtake agreement, a letter of intent with the biggest gypsum trader in South Africa to sell our phosphate gypsum that we process and take the rare earths out of. Unfortunately, we can't sell all the phosphate gypsum we produce. We process every year. We're processing 2.2 million tons. We'll be able to sell somewhere between 400,000 and 600,000 tons per annum into the phosphate gypsum industry, because the whole industry is only 1.2 million tons per annum. But obviously, over the course of the project and for another 40 plus years, we will continue to sell gypsum into the South African market, and eventually it'll be a complete rehabilitation and cleanup of the sites at Phalaborwa. So it's a very, very strong ESG story, and the fact that we are protecting the environment by what we're doing, we think makes Rainbow also a compelling story. And then just in terms of diversification, we also signed an MOU with Mosaic, one of the largest fertilizer producers in the world. They're a circa $14-15 billion business, and they've got a large phosphate deposit in Brazil. They've got a large phosphoric acid mine in Brazil, acid production process plant in Brazil as well at Uberaba, producing fresh phosphate gypsum. And we've entered into an MOU to use our IP to develop and extract the rare earths out of their phosphate gypsum on a 50-50 basis. And we've already released announcements regarding Uberaba, and they're on our website for those who want to go and have a look at more detail about the Uberaba project, which we are very, very excited about at Rainbow. Once again, it's a very similar hard rock carbonatite producing phosphate slurry, feeding a phosphoric acid mine, where they add phosphoric acid plant, I should say, where they add sulfuric acid and heat, and they create a waste residue or phosphate gypsum with rare earths in it. And then we've had strategic partnership approaches from because of our advancement in the space, because of our positive applications of our process flow sheet, our Rainbow's IP, in terms of producing mixed rare earth carbonate and now producing separated rare earth oxides to the purity level of 96-97%. We've had approaches from guys in Canada and India and Saudi Arabia, all in the phosphate gypsum space, all looking to partner with Rainbow going forward. So this is opening up a huge addressable market for Rainbow. The fact that we are getting this technology right. I did announce a delay in our RNS some 4 weeks ago, but that delay is purely on the fact that I've always said, from a technical point of view, we won't take any shortcuts. If it takes 6 months or 9 months longer to get to the right result, it's far more important than going into production with a flow sheet that's not 100% right. You'll pay, you'll regret it down the line. And having a team that's built many mines and process plants around the world, we recognize that this is not something that we want to do at Rainbow. It will take a bit longer to get it right. And the fact that we are getting it right, and we will get to the final purity level that we're targeting, 99.5% purity in separated oxides, this is why we are getting these approaches. And it's far more important to spend a bit longer getting the tech right, because it'll turn Rainbow into a very diversified project company, or a company with lots of projects around the world, and we believe a multi-billion-dollar business eventually. Thank you. Just in terms of the market, we all know that these rare earths are essential for as I said, the green transition. They're currently used in consumer electronics. Until recently, about 50% of all permanent magnets that had rare earths in them were in the consumer electronic business. In other words, smartphones, speakers, drones, handheld drills, electric scooters, electric motorbikes. And then the last few years has been a massive take-up of permanent magnets in electric vehicles, as well as plug-in hybrids, which also require electric motors using permanent magnets. and also a very strong driver is wind turbines. And then there's also the defense application, and the geopolitics we know around the world are not great at the moment, and defense is even more key now, because every American F-35 fighter jet, for instance, takes 420 kilograms of rare earth elements in it. Abrams tank has got, I think, 2 to 3 tons of rare earths per tank, and US submarine, I can't think of the class name now, but one escapes me. But these bigger submarines got sort of 15 tons of rare earth elements in them, just to give some examples of the strategic applications in defense. We believe that the trend is unstoppable. It's a global mega trend in terms of EVs. The take-up might be a bit slower. We know that the take-up has been a bit slower, but it's not going away. We know that in a lot of countries around the world, between 2035 and 2040, you won't be able to buy an internal combustion engine motor, what they call an ICE motor vehicle. It'll be plug-in hybrids, and it'll be full EVs. Plug-in hybrids also take up a lot of permanent magnets in their motors, so it's very similar to a full EV. And as you know, even though the take-up in full EVs has been slow, the take-up in hybrids has been very, very strong. So the slow take-up in EVs has been more than the take-up has been more than offset by the plug-in hybrid take-up. And then rollout of wind turbines, we know that's not going away. These wind turbines, a 3 megawatt direct drive wind turbine takes 2 tons of permanent magnets in it, and of those 2 tons, 600 or 700 kilograms are rare earth elements. So we all know that wind capacity that's been rolled out offshore is not going away. It's growing very, very strongly. As you can see, in 2023, it grew by 112%, and there's extra 500 gigawatts of offshore wind turbine capacity forecast to be installed by 2034. So massive rollout of wind turbine capacity is still on the cards, and this is a mega trend, as I mentioned, that's not going away in both electric vehicles as well as wind turbines. I was in Toronto just 3 weeks ago at a very large rare earth conference, the Adamas Rare Earth Conference in Toronto. All the major players in the industry were there, and the whole conference was very excited by 2 new frontiers of permanent magnet demand over the next decade, and these are humanoid robots. And just a week or so, or in fact 2 weeks after the Toronto conference, Elon Musk announced the launch of his humanoid robots. At the moment, the humanoid robots have some 36 rare earth magnets in them, and they're forecast to go up to 78 permanent magnets, basically doubling. And the reason why they're doubling is to give humanoid robots full movement, similar to what we as a human have. So this will make these robots able to pick grapes, tie your shoelaces, serve drinks in a bar, pour cocktails, and so forth. So we all know that you've got negative growth rates in China, negative growth rates in Japan, negative growth rates in Europe, and so forth. In certain countries in Europe, like Germany, Italy, and these robots will be able to fulfill a large labor demand that that these countries will be looking to source from outside, from somewhere. And we believe robots are going to be able to make up for a lot of this labor that at the moment certain Western countries are looking, and China included. These humanoid robots are, as I said, are forecast by 2040. They say there'll be 1 billion of these built, and some forecasters are even more aggressive than that. But the amount of rare earth magnets per robot range from 5 to 15 kilograms. So that's similar to an EV, to 3 times what's required in an EV, depending how sophisticated these robots are. And this is something that's very real. And about 2 months ago, my son was in Los Angeles, and he sent me a video of a robot doing a pizza delivery in LA, and he's already received deliveries from Amazon via drone at the moment. So the take up in drones is going to increase in the commercial area, and we've already seen it starting to replace Uber scooter drivers and Deliveroo scooter drivers, and this is very real. and this is a trend which is not going to go away, and it's going to grow dramatically over the next decade. If you could just show a quick video of that of this delivery taking place in LA right now. Thank you. That was my son stopping the robot there on its way to deliver a pizza or a hamburger. But yeah, this is very real, and it's very exciting for the rare space that we see massive demand over the next decade taking place in this field. And then in the next frontier is what they call eVTOLs, or e-mobility. This is electric vertical takeoff and landing vehicles. Basically, as I mentioned, drone deliveries are going to get bigger and bigger. The payloads are now up to 40 kilograms. The next payload is going up to 100 kilograms, and then they're talking up to 400 kilograms. eVTOLs are basically air taxis, very real. 30 years ago, we thought this was pure Star Wars and was pure science fiction. Well, it's here today. At the moment, in the US alone, there are 4 licenses, commercial licenses that have been applied for at the FCAA, that's the Federal Civil Aviation Authority, to start air taxi trial runs commercially from 2 from New York or JFK, 1 in Chicago and 1 in LA. And basically these guys will be able to take you from a place like LA to San Diego, which is over an hour's drive in traffic. You'll be able to do that trip in 8 minutes, and the price is the same as an Uber Black per kilometer. So for the same price as an Uber Black, you'll do a trip in 8 minutes, which will take you an hour and a half in traffic in LA. And the forecast of this type of demand is going to pick up, as I said, next year. It's a commercial reality, and then in the next decade, between 2030 and 2040, we see a massive take-up of this type of mobility. And it's a very exciting new frontier for rare earths and permanent magnets. And it's going to ensure that the mega trend stays in place at even a higher rate. In fact, by 2040, the demand for robots and eVTOLs for permanent magnets will be outstripping electric vehicles, plug-in hybrid vehicles, as well as wind turbine demand. We all know that China controls the supply chain from mining through to separation, refining, and magnet manufacturing. And this is why there's such a strong focus on diversifying supply outside of China. We'll always have supply from China, but it doesn't make sense to rely on one country to dominate so strongly. At the moment, China dominates about 60% of primary rare earth concentrate production, but over 90% of the downstream beneficiation supply chain is controlled in China. And there's a massive focus, as we all know, to diversify outside of China. And we believe Rainbow is going to be part of this diversification supply chain, and we will be one of the successful projects which is coming into production in the very near term. There are lots of development projects out there. Lots of new projects have apparently been found in Brazil, for instance. These are ionic clay deposits, but like the market knows, mining projects take typically between 15 and 25 years from discovery to go into production. So, even though there are new discoveries, these are a long way away. So the near-term projects that are going into production, and Rainbow is certainly one of those, and the project like Phalaborwa will also have a very similar short time frame to go into production, like we are seeing what we're achieving with Phalaborwa in Rainbow. It's well known about the geopolitics, and with tariffs now being imposed on Chinese electric vehicles, and then the Chinese responding with export bans on certain key materials and certainly technology. So this is not going away at the moment. And whether it's a Biden administration in power soon, or the Kamala Harris administration gets into power, or it's a Trump administration, they are bipartisan on the Chinese threat to these critical minerals, and that is not going to change, whoever is in power in the US in the next month. Just a snapshot of our project once again. On the right-hand side, you can see there was a pilot of reclaiming the phosphogypsum at Phalaborwa that we ran in February this year very successfully, and that was part of our DFS process to prove that we could reclaim the phosphogypsum as we envisaged it through high pressure hoses, and that was just a photograph of the trial mining that took place, and lots of investors and analysts were on that site visits in February this year. As I said, our capex and our PEA, which we released in October 22, was circa $300 million. With the process flow sheet development we've been able to achieve by running a large-scale pilot plant at Mintech over the last year, we believe our capital expenditure will certainly be within that range. The project NPV was based on rare earth pricing at the time, or spot rare earth pricing at the time of the PEA. And as I said, we've got one of the highest proportions of neodymium and praseodymium in our basket of any rare earth project in the world at just over 29%. And as I said, at spot rare earth pricing, we believed we would have achieved circa $190 million of EBITDA with an operating margin of over 75%. So very, very strong metrics, financial metrics, and we believe by the time we come into production, which is forecast now for 2027, rare earth pricing will be very similar to where we were in the PEA. Once again, this is to visualize the project at Phalaborwa. What you can't see here is that just on the top of this photograph, you've got the Phalaborwa Mining Company on our border, literally across the fence. You've got the phosphate mining company also operating, and they're also producing iron ore out of that same carbonatite deposit that's been mined for 60 years and it's got a life of another 40 odd years. On the top right-hand side, you can see the mothballed phosphoric acid plant that was run by Sasol that created over a period of 60 years the phosphogypsum stacks that you see. But there's a lot of infrastructure in place, high voltage switch yards in place, the high voltage power line runs through the property. The property's got security fencing already. It's served by Blacktop Hot Top Road, and very importantly, the Phalaborwa copper mine, which has got a new sulfuric acid plant operating on our border, has got some 10,000 tons of excess sulfuric acid to get rid of every month. We'll be requiring circa 45,000 tons a month of sulfuric acid, and we'll be supplied it directly through the fence and at a very, very low cost compared to any other rare earth project in the world. At the time of our PEA, the phosphoric acid price delivered to the Congo for copper mines in the Congo was $450 a ton. In our PEA, it was $95 a ton. Let's just give you an idea of how important it is to have this source of sulfuric acid on our doorstep. What's important here is that we don't have your typical mining costs for a mining project. We don't have any crushing, we don't have any drill and blast. Then we don't have haul to a stockpile. Then we don't have crushing, milling, flotation to produce rare earth concentrate. Then that rare earth concentrate in a typical mining project, you have to crack into a chemical form before you can start the separation. And to crack it, you add sulfuric acid and heat into the mineral concentrate to crack it into a chemical form. At Phalaborwa, as I mentioned earlier, they add sulfuric acid, they add heat in the phosphoric acid production process, and that means that these two phosphogypsum stacks are chemically cracked, and this was a huge benefit to the project. So 2/3 of the flow sheet already taken place for us by the time we start incurring costs to separate the rares out of this phosphogypsum. As I've mentioned, we've got a very low capex and very low opex, and as you can see, the sensitivity to rare earth pricing in a low pricing environment where we have been for the last 6 months or 9 months. Rare earth prices a short while ago were circa $47, $48 a kg for NdPr. We're now sitting circa $60 a kg for NdPr. But it's been well publicized that these low rare earth prices at very few, in fact, no Western rare earth projects can make money at these prices. and that was by the chairman of Valuka. And even the Chinese have indicated that at these low prices, they are battling to break even. If you look at this chart on the left-hand side, at 78.46, that's the rainbow basket at current earth pricing, which is circa $60 a kg for NdPr. But the reason why our basket is higher at 78.46 is because we've got dysprosium and terbium in our basket, which are very, very highly priced rare earths. And that means the average basket price currently is 78. And at $78 a kg, if you look on the right-hand axis, we would still be making circa $80 million per annum of EBITDA. We don't believe there's any rare earth project in the world right now that would be making $80 million of EBITDA per annum at current rare earth pricing. So just this slide just demonstrates how resilient we are to rare earth pricing at the moment in terms of the low pricing environment. And of course, as rare earth prices continue to rise, that's only going to be very positive for Rainbow going forward. We've mentioned that this is a very good ESG story. So we believe we are a responsible producer of rare earths. It's a brownfield site. It's a closed loop. We're going to be rehabilitating those sites, depositing those stacks, redepositing them onto a line stack site to RFC principles. At the moment, those stacks are online because 60 years ago, there was no legislation forcing people to line stacks of this nature. We'll be lining these stacks and selling this benign gypsum into the South African market. And we'll be using some of the infrastructure again. So it's very much a circular closed loop story. And we believe bodes very well for us being a very, very green producer of permanent magnet materials that go into permanent magnets. Just as I said, we're in a unique position in the rare supply chain. We don't have a lot of the upstream processes that are very expensive for rare earth projects. We've got no mining, as I mentioned earlier, no concentration, no cracking. We start off with a cracked chemical gypsum stockpiles, and we go straight into separation. Separation using traditional solvent extraction, which we as a team understand very well. You got 2, 3, 4,000 stages of what they call mixers, settlers, and solvent extraction, which is why it's so detrimental to the environment in China. And we have continuous ion exchange. We will have 2 steps of continuous ion exchange and 3 steps of continuous ion chromatography. So far, far smaller footprint, and which will be apparent to the market in the next couple of months when I produce a fly-through of the footprint of this project compared to the footprint of other earth projects. So I believe puts Rainbow in a very unique position. As I said, our primary flow sheet that we've been able to prove is through massive and extensive piloting that we've undertaken over the last year. We ran a large-scale pilot plant at Mintech. When I say large scale, our feed rate for this pilot plant was 20 kilograms per hour. A typical mineral processing pilot plant runs at between 3 to 5 kilograms per hour of feed rate. So we're circa 10 to 20 times larger than a normal pilot plant. And we ran extensive leach testing. And as I said, we produced some 35 kilograms of mixed earth carbonate, which proves that Rainbow is now de-risked if we stopped at the carbonate stage. But once again, as I said, we were able to also simplify our flow sheet from the PEA. I've made a large announcement on this. It was on our website on the RNS some 4 weeks ago, where we went into detail about the optimization, the steps we've been able to take out of the PEA flow sheet, which all bode well for our CapEx and OpEx for the DFS, and which will also result in a smaller footprint, which is also very beneficial for the project. As I said, as you can see here, this was the PEA flow sheet that we initially priced and developed in October 22. And all those colored blocks in light purple are the areas that we've been able to optimize and remove, which bodes well for the DFS going forward. And as I said, there's more detail of this on our website. We are very proud at Rainbow that we always go into detail in our announcements that are of a technical nature. We make sure that the market's got confidence that the technical team know what they're doing, and we've only just kept back enough detail that that protects our IP and what we've been able to develop at Rainbow. We also then successfully shipped carbonate to our back-end pilot plant in America. As you can see a photograph of it there, highly sophisticated, controlled with a very large amount of software. And at this stage, we saw very good separation of what they call the SEG group, which has got a potential for a revenue stream that wasn't in the PEA that we were looking to for the DFS. And basically, we've achieved successful separation of NdPr up to 96, 97% purity level, which as I've mentioned, we've deemed as a saleable product. And our next steps are now that we announced in an announcement some 4 weeks ago that we are taking this pilot plant from Florida to South Africa to reassemble it and run it, because we've recognized that we need recirculating streams from the back end, from the front end into the back end, and vice versa, going backwards and forwards again, to maintain our overall recovery rate of 66% recovery of rare earths from your initial feedstock is a very, very high recovery rate in the rare earth market, and we want to protect that. And also, we also realize that the final waste streams that come out of that back-end pilot plant have to be deposited somewhere. And at the moment, we can co-deposit these with the gypsum that goes back onto the gypsum stack. These waste streams came into the front end as part of the phosphogypsum, and they'll then be fed back into the phosphogypsum and co-deposited back onto the stack, so we don't have any environmental issues. Whereas if we had at one stage, we thought we could maybe build a separation plant in the US as a standalone project, we would have the problem that we would impact our overall recovery, which wouldn't make sense. And lastly, we would then have to apply for permitting for these waste streams. And even though there's only trace elements of uranium and thorium which came into with the feed, will go back with the waste stream, as I mentioned, in America, that would require extensive permitting, and how long's a piece of string, you know. We all know in America that if you have a permitted site, it counts for a huge amount, and I never understood that until I was involved in the US and realized that these permits can take anywhere from 3 to 10 years to get permitted, these sites. Environmental permitting regulations in the US would mean that I wouldn't be able to put my hand on my heart and tell you when we'd be in production in the US with the final stage separation, because I wouldn't know how long that permitting would take place. So by bringing it back to South Africa, it made sense on a number of fronts, and that's exactly what we've done. Just to give you a timeline, as I've mentioned, we've in 2024 we've given a resource update. We're moving the pilot plant back to South Africa. We've already which, you know, the Mintech pilot plant was sort of, those final runs were finished in May, June this year. And during the course of this year, we've run the pilot plant in the US and Florida, and we've achieved those separation results I've spoken about. So I think we've had a very successful pilot plant operations in both the front end and the back end during the course of this year. We are, as I've mentioned, we will be dropping out an interim report before the end of this year, circa early December, which will then be able to footprint the economics and the capex of the project very close to the DFS level of accuracy. And I believe we'll be able to confirm that our PA numbers were very, very good numbers, very conservative numbers. And as I said, we'll then be able to, on the back of this, we'll produce a fly-through video of what the pilot plant, or not the pilot, what the commercial scale plant will look like. Sorry for getting my plants twisted there, but the commercial scale pilot plant, and the market will be able to see exactly the footprint of this plant and how small it is compared to a traditional plant, which once again, as I said, is very good for the economics and the capex of the project. The environmental work is well underway. We're about 80% done on the EIA permitting and the environmental for the DFS. Gypsum stack design has been done by Automan in the US, the global world experts in gypsum stack design. They've designed and built over 100 gypsum stacks globally. Automan are doing that work. They'll be finished at DFS level before the end of the year. And we've got the front end reclaim portion of the DFS will be complete at DFS standard by before the end of the year. So we're well on the way with large parts of our DFS will be complete by the end of the year. It's just the final stage that's led to a slight delay in the DFS, which will be completed during 2025. And we'll be also the interim report will be kicking off our project financing, and we are still forecasting production for 2027. So that's the corporate team. You can look at this at your leisure. We do have this footprint, which is highlighting our global opportunities that we have at the moment. We've got Uberaba in Brazil, which is going along very nicely. And as I said, you can look at the announcements, the RNS announcements surrounding Uberaba. We've had approaches from India, Saudi Arabia, and Canada. We have a long-term opportunity with OCP in Morocco, and we've got our flagship project moving very strongly ahead in Phalaborwa in South Africa. As I said, why Rainbow? Well, we've been able to achieve the first commercial production of rare earth elements from phosphogypsum. It's one of the highest margin rare earth projects in development today. We've got a unique flow sheet that's cheaper, safer, and more environmentally friendly than traditional solvent extraction. We've got strong support from an independent verification of our process through the DFC, through TechMet, and then investments via TechMet, and through Cora as well. So we think we are on the cusp of unlocking a huge global opportunity for low cost and responsible supply of rare earths from phosphogypsum. Thank you very much. And at your leisure, this is on our website, and you can go into the appendices at your leisure, where there's even more information for your analysis. Thank you very much for your time.
Perfect, George. That's great. And thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company takes a few moments just to review those questions that were submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. George, as you can see there, we have received a number of questions that were both pre-submitted ahead of today's event, as well as those that have made their way through during your presentation this morning as well. So firstly, thank you to all of those on the call for taking the time to submit their questions. And George, at this point, sir, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that would be great. Thank you.
Thanks very much. The first question is a rare earth element product from the pilot plant able to be sold? Well, I'm not sure if this question is, are we going to sell what we're producing in the pilot plant? Answer is no, because this is used for marketing and for sending to various offtake OEMs that we're in discussions with. But if we stopped at where we are, as I said, at 96 or 97% purity, yes, we've established that this could be sold. But as I said, we are optimizing. We're very confident that in our optimization process taking place in South Africa, once the pilot plant gets here shortly, that we will get our targeted purity level. Next question is Kakara Burundi update, please. We have had a couple of discussions with the government this year. There was a World Bank report published about 4 weeks ago on the mining industry in Burundi, which supported Rainbow as being the only or the best, most responsible miner in Burundi. And as we know, they suspended all mining activity in Burundi, not just Rainbow. And we've recently been told by the government that we were in negotiations with them. We gave them a proposal, and now we've heard from the government that they want to invite Rainbow back for negotiations, we presume, to discuss our proposal. So hopefully it will be positive news shortly on Burundi. But I might stress that Burundi is a very, very small part of Rainbow going forward. Our key project is Phalaborwa, followed by Uberaba, and then the other opportunities I've highlighted. The next question is, how long will the current cash position last? Is the DFS with the recent announced delay completely covered now? Yes, the DFS is completely covered even with the delay. We well funded into the fourth quarter of 2025. The next question is, could you expand on why 99% purity for NdPr was not possible to achieve? It is a matter of trial and error. Is it a matter of trial and error adjusting the parameters or equipment related to something else? The 96% purity, although saleable, would be disappointment for many investors. I fully agree with taking the time to properly optimize the flow sheet, and the way is the way to go forward. and is better in the long run? How confident are you that your team can achieve the 99% purity production? It's a good question, and yes, as I mentioned, we've achieved 96 or 97%. That's through 2 passes of the CRC unit in Florida. What we've realized is that we've always said we'll need a 3rd pass, but more importantly, that we need to remove even more deleterious elements or basically impurities from the phosphogypsum feed before we go into the final stage separation. We've introduced a continuous ion exchange step at the front-end pilot plant in South Africa. So, and also with the recirculating loads, in other words, so as you scavenge your purity off your pregnant leach solution on the resin in these columns, in the continuous ion exchange columns, you always leave a bit of rare earths behind. And by recirculating those loads from the back end into the front end, you recapture those rare earths that are in solution, so you never actually lose them. So you actually get 100% of extraction from the back end by never losing those rare earths that you keep recirculating, and that's why we'll achieve overall 66% recovery, which is very, very critical. As I said, the team at Rainbow have over the last 4 years have purely worked on this phosphogypsum. They understand not only the front end process unbelievably well, they also have a huge amount of knowledge now on the back end separation. They've been working with K-Tech and the RP that is in Florida, and our team are very confident that by tweaking the eluents and just the type of resin, that will get the final purity level. And we might have to go to a 4th step of CRC to get that final purity. Basically, each step you get higher and higher purity. We always thought we'd get it in 3 steps, but if we had to go to a 4th step, there wouldn't be a train smash to get to the purity level, because that final stage separation, the size of that plant would be basically the size of the pilot plant that you've seen in the photograph, or you can go back and look at under your own time. So what I'm saying is that the flows reduce so much between each step in these processes that by the time, if we had to introduce a 4th step, the pilot plant size that we see there would be sufficient to get that final stage purity. So we are very confident, as I mentioned. Economically, would you consider adding another purifying step into the current stage? Yes, I've just answered that question. Thank you. The Chinese have lots of expertise. The question is, the Chinese have lots of expertise and dominate the sector. Would you consider a JV with them? The answer is no. As I said, we see ourselves as part of independent supply chain, and one of the conditions of $50 million in equity financing at the project level from the DFC is that we only support Western supply chains. So that would mean South Korea, Japan, Western Europe, Canada, America, and so forth. Do you think Rainbow will be able to economically extract rare earths from sedimentary phosphogypsum stacks within the next 10 years? That is a good question, and this basically talks to the OCP MOU we have. The rare earths in that phosphogypsum is very, very, very low compared to carbonatite sources of phosphogypsum. So to answer the question is that we've basically got a free option here. If we over the next 10 years could develop a way to upgrade the rare earths in that phosphogypsum and then develop an economic flow sheet, we would obviously do it within Rainbow, and that's why it's basically a long-term option. But as I said, our focus right now is on carbonatite sources of phosphogypsum, which is some of the approaches that we've had. Is the radioactive content of Phalaborwa phosphogypsum's tailings comparable to Phalaborwa? Yes, it is comparable. I think, if I can remember, it's marginally lower. So yes, very, very low and very positive for the project. Has the patent application been submitted to the front-end flow sheet? To be honest with you, no, we haven't submitted it because we realized that we're going to be optimizing the front-end flow sheet and making changes, as you've seen in my presentation. So once we have developed the flow sheet, then we'll take a decision whether we want to patent it or not. To be honest with you, we're not sure patent's the right way to go, because when you patent something, you have to lay out everything in detail in your patent to that's the only way you can get a patent. And basically that means we'll be opening ourselves up for somebody else to see exactly what our IP is. And at the moment, our strength is that we've developed the IP. It's in-house. No one quite knows how we're doing it. And we are way ahead of everybody else in the game. So we're the front runners. So I think it's basically going to be like an Uber or an Uber Eats. They were the first on the block, and they were so far ahead of the market before other people copied them. They are still the leaders, and we believe Rainbow is in a similar position. So it's not 100% certain whether it makes sense to do a patent or not, but we'll evaluate it once we've nailed down. So once we realize there aren't any more optimization steps on our front-end flow sheet. At which stage will the Phalaborwa project is envisaged that the TechMed 50 million could be made available to Rainbow? The terms of that 50 million are on the publication of our definitive feasibility study, and when we have a financing term sheet, and then that 50 million flows as equity into the project. Can you give an estimate of the discount in percentage terms should the product not reach 99% purity? And we stuck at 97%. To be honest with you, as I've mentioned, the mixed rare carbonate, which we know we can sell all day long, is around about 70% payability. And if you think 95.5% purity is 100% payability, it's going to be somewhere in that range. I don't know 100% for sure, but I would imagine it's somewhere between a 10, maximum 15% discount. But it's purely my opinion. We have not physically tried to go and get pricing in the market, because we don't believe we need to. We believe we'll be at 99+% purity. Is it feasible to boost the extraction rate by introducing a second extraction circuit? Of course, it's feasible, but to be honest with you, we think that what we intend to produce at Phalaborwa is more than enough as a first pass. We could always look, if we introduce another plant, it will reduce the timeline of the project quite significantly, and that doesn't make sense. But certainly at Uberaba, where we are looking at extracting the REEs from the live phosphogypsum feed, there we'll believe we'll have two modules producing REEs out of their phosphogypsum. I'm just looking for any other questions here that I might need to answer. Just a question on my presentation, whether it will be updated on the website. Yes, it has been updated. It's there. So how are you protecting your IP for your processing? That's once again talks to the patent application. I've mentioned the patent application. We're not sure it makes 100% sense because you then outline all your IP in the patent application, and we'll take a decision on that at the right time. Might Rainbow have any interest in partnering other miners to process their rare earth carbonate into REO? As I said, we have approaches from other projects at the moment, but that's to take the rares out of their phosphogypsum that they are producing through a similar process that we saw at Phalaborwa and Uberaba. If this was phosphogypsum produced from a hard rock carbonatite or ionic clay, technically, I suppose we could look at partnering with people. So the answer is not no, but at the moment we've got our hands full with the opportunities we have already at the moment, to be honest with you. Rainbow has secured attractive funding and solution through a royalty agreement, further de-risking the project. Will Rainbow apply for DFC funding? As I've mentioned, we already have DFC funding committed through an equity deal we've done with the DFC of $50 million. But we'll be certainly talking to the DFC as being a partner in the project financing package that we'll be looking at for Rainbow. We anticipate, if we still stick at a $300 million capex number, that we'll have $200 million of debt, $100 million of equity. 50 of that equity is already spoken for by the DFC, as I mentioned. So, and the DFC have indicated they would like to talk to us on the debt package as well. So we will definitely be talking to them on part of that $200 million debt package. Just to conclude, I'm trying to think, any other questions here? Which quarter are you anticipating breaking even? Obviously, this is a question for when we get into production. As I've indicated, our timelines have been. I mentioned earlier that we were looking to go into production early 2020, or we'll be commissioning beginning of 27. This has moved out slightly by the delay in the DFS, as I've owned and alluded to, well, as I mentioned in our announcement 4 weeks ago. But we're still forecasting being in production in 2027, in the last quarter, or sorry, in the second half of 27. And this type of plant to ramp up to full production and full sort of revenue is very short compared to a mining project. We don't have, large scale stockpiles and faces to mine to build up stopes for your mine plan, which takes a long time when you're commissioning a new mining project. And then your plant itself takes a long time for the gold to come out of what they call lockup in the mill and so forth, and then your carbon and leach circuit and your carbon inventory of gold. So it takes quite a lot longer for this to come out. And this is a mineral processing. As I said, the throughput will be achieved very, very quickly. In terms, we'll get up to nameplate throughput very quickly, and production of the of the NdPr and eventually the DyTb, we believe will also be fairly quickly. So, I can't give an exact answer, but it's a far shorter timeline than a typical mining project. Thank you. I hope I've answered all the questions adequately, and I think my time is almost up. And I would like to thank everybody for spending the time this morning to get an update on Rainbow, to see the progress we've made, and to listen to the answers to the questions I've been asked. Thanks very much to everybody.
George, that's great. And thank you very much indeed for being so generous with your time there and addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But George, all that leaves, I guess, is for me to thank you once again for updating
No, sorry,
investors.
Jake. Just one question I think I need to answer here
Absolutely.
before you sign off is, will we achieve any value for the IP when, as you say, it is rolled out globally? The answer to that question I think I've answered, which is that we've had these independent approaches from projects in India, Canada, and so forth, Saudi Arabia, to partner with Rainbow because they see the value of our IP. So yes, as these partnerships develop, like the Phalaborwa partnership, we will soon see the value that this brings to Rainbow over the course of the next sort of 6 to 12 months. Thanks very much.
Perfect, George. Thank you. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Rainbow Rare Earths Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.